Hello traders, welcome back to the channel. This is Vishal and you're watching the weekly sectoral analysis. Now we can see that in the daily and the weekly time frame chart the trend is pretty much up, and even in the monthly time frame chart the trend is up. No problem in RSI whatsoever. Yes, we can see that the prices have closed above the trend line in the weekly time frame charts, and that's a good sign. But as I just shared in my previous video, that I'm just giving an extra 40 to 50 points, just as a buffer zone, so that we have a proper clean breakout above 22,500. So the Nifty has been able to close just below 22,500, but yes, things are looking okay. Yes, there is a sign of waning momentum over here. I can completely agree to that. But it also seems that probably the sign that the momentum is waning on the downside is getting weaker and weaker, and probably the chances of market moving higher are increasing. Okay. Yes, the sign is still there of waning momentum, but maybe there is a decent possibility that over a period of time that sign might go away. Okay, because that signal is weak now. Now, taking about the daily time frame chart, I think things are pretty much okay. Nothing seems bad over here. Only thing is the momentum. If it picks up slightly more, then it will be better, because if you see this particular zone in Nifty, it was of high momentum, and now you can see a little bit ups and downs. So if you have a higher momentum over here, then it will be better for the bulls. Now, talking about Bank Nifty, I should say that in the weekly as well as in the daily time frame chart, the trend is up. Especially in the daily time frame chart, if we check this entire gap, which got closed at 48,000 somewhere, that has been filled. But I should say that the prices, if it closed above this level, above 48,000 or maybe 48,100, then it will be even, you can say, better for the overall market, because prices closing above a resistance band is even considered more bullish. All right. Let's wait and watch what happens, that whether we have a small consolidation or a dip, or before that we surpass this level on closing basis and we see this all-time high hitting once again. I guess maybe in the next week or maybe next 10 days we'll get to know. Now, talking about PSU Banks, the trend is up. There is no doubt about that, even in the daily and in the weekly time frame chart. But yes, you can see very, very clearly that in the daily time frame chart, we have hit a resistance. Although this resistance point is not very, very strong, but some sort of consolidation or some sort of maybe profit booking could not be ignored. But again, this particular profit booking may not be huge. Now, there is one stock, which is Bank of Maharashtra. It's trying to go higher, and we need to just understand that if it closes about 64.45 or 65, then probably the level of 69 might be tested very, very soon. In the private banking pack, I should say that things are still okay. Nothing bad, nothing much. Things are holding on. The good thing is we have not been able to break this low. Prices are trying to move higher, but again, I would just like to highlight one particular thing, that there is a big, big gap over here. This needs to be filled. Until and unless this gap is not filled and prices don't close above it, I think we will always be in some sort of doubt that will the bullishness, will the momentum which has picked up recently in last few weeks will sustain or not. Considering all the stocks, I think there is one stock, although it's not a leader of the pack, I would be really happy if the HDFC Bank or the Kotak Bank or these two stocks especially pick up, because ICICI Bank has already been performing nicely. Now, this is one more stock which is trying to go higher. You can see that there is some sort of congestion zone over here, and prices are trying to break on the upside. So I guess traders should keep a watch on the stock. But I always say that an overall sector will move higher only if the leaders do. So Kotak Bank and HDFC Bank, probably they need to move higher if they want to see the entire private banking sector move up ahead. Energy pack. I think things are pretty much overstretched even in the daily and in the weekly time frame chart, especially in the weekly time frame chart. So overall trend continues to remain up. Anyone who is holding stocks in this particular sector can continue to hold them with a trailing stop loss. But you need to be very, very careful, and you need to be extremely careful if you're initiating any new trade in this particular sector. Yes, there are one or two stocks, but again, a certain amount of caution is always good. Metal pack. Now, metal pack, we can say that the overall sector is looking fine. It's looking bullish. Even in the weekly time frame chart, things are improving a little bit. Only one thing which I don't like is, that the swing, the way it's happening, it's like one way, one leg up, one leg down, again up, down. So there is no continuous momentum which we probably saw somewhere over here. And if you remember in my previous Nifty and Bank Nifty short-term view video, I clearly told that the middle pack will move higher, and after that you can see what has happened on Friday. Now auto pack. Now considering auto pack, I think the trend is up in the daily time frame chart as well as in the weekly time frame chart. In the daily time frame chart, there are signs that the trend, that the momentum is slightly weakening, but the trend is strong. So I guess anyone who is holding the stocks with a trailing stop loss, that is fine, but initiating new trades at this juncture in this sector is not recommendable. But if you do it at your own end, please be very, very cautious. Finance pack, once again, I think the things have started looking a little bit better than before, considering this previous low is not broken. Prices are moving higher. But just like the private banking pack, we need to understand that this gap needs to be filled. All right. Consumption pack. Now, consumption pack, the sector is moving higher. Prices are moving higher. It's a good sign to see. And not a good time to initiate new trades as a swing or a positional trader. Anyone holding stocks from a lower level can continue to hold with trailing stop losses. In fact, even if you see all the constituents of the consumption pack, you might not find extremely good trades at this point of time. FMCG pack. Now, FMCG pack, I should say, especially in the daily time frame charts, things are a little bit hunky-dory. You can see that prices have retraced, they went up, again they came down. Especially if you just go to a lower time frame chart, you can see a lot of activity, a lot of sideways movement, up, down, up, down, up, down. So this is a lot of consolidation going up. Now, what we need to understand is, if you try to predict that the sector is bottoming out, you can see a hammer, you can see a bullish candle over here, then it will not make sense. The reason for that is a very less amount of stocks in this particular sector, especially the leaders, they are not performing. There is only one stock which I can see, because currently it's not a scenario in the market where you will be able to trade just any breakout. It's a scenario, it's a time when you need to be very picky about your trades. This is only one stock as of now where if you're a short-term trader or a positional trader, you can keep a watch on this particular stock. But apart from that, you need to be very, very careful if you're, trying to initiate new trades in the FMCG. Infrastructure. Now, infrastructure, you can say that the trend is up. The momentum is also on the upside, but the weekly RSI is at 91. Highly, highly overstretched. I would not like to initiate any new trades in this sector until and unless there is some sort of profit booking or a consolidation. Yes, you can continue to hold your older trades, but initiating new trades will not be easy over here. IT pack. Now, IT pack, there are two things which we need to understand. One thing is that in the daily time frame chart, we have a sudden drop, and this sudden drop has happened due to this particular resistance, this Fibonacci resistance. And in the daily time frame chart, again going back to the daily time frame chart, we can see that the prices are trying to take support from this previous low. Now, as a short-term trader, as a swing trader, you might think that let's have a look at these stocks. But when you will have a look at the IT pack, you will find only one or two stocks which are actually nice for a short-term trader or a swing trader. But most of the stocks, if I'm not wrong, if they do not go up very, very fast in the next 1 week or maybe a little bit more than that, then there are chances that some sort of consolidation will start happening in the IT pack. So be very, very careful exactly which stock you're trying to pick. Pharma. Now, pharma is in the uptrend, one of the outperforming sectors. Yes, we can see a higher high in price, lower high in RSI sort of reading. It clearly means that the momentum is slightly slowing down. That's it, nothing more than that. And one thing we need to understand is there are two stocks which I like as of now. One is Sunpharma. Sunpharma has recently outperformed in the shorter term time frame charts as well as in the daily time frame charts. Chances are that it might move up even higher, maybe 3 to 5% higher in the next few coming days if it sustains above this high which was created on Friday. And one stock is not performing right now. I've even shared my view on Twitter. It's not performing right now, but if you check the daily time frame chart, it's trying to take a support from a previous trend line. So if we have a breakout in this particular stock, Oro Pharma, I guess positional traders should surely keep a watch on this particular stock. Okay. PSE. Now PSE sector, it's an uptrend, highly overstretched in the weekly time frame charts. Weekly RSI just above 90, also giving us signs of waning momentum. So as a trader, I would not like to initiate new trades in this particular sector. Yes, since the trend is up, if someone is holding any particular stock in this sector from a lower level, you can continue to hold it with a trailing stop loss, but initiating new trades may not be a very good activity at this point of time. Now Realty Pack again, the trend continues on the upside. There is a big negative divergence in the price and in the RSI in the weekly time frame chart. Although this weekly negative divergence is not very strong, but as a trader you need to understand initiating new positional trades in this sector is very risky until and unless there is some specific price movement which will give you a hint that a particular stock can move up. But otherwise, most of the stocks, like I track around 4 to 5 stocks in the Realty Pack, I guess you should avoid initiating new positional trades. But yes, new short-term trades, short-term momentum trades, not even swing trades, that one can continue to do. But other than that, you should be very careful. And yes, if you're holding any old swing trades, you can continue to hold with a trailing stop loss. Mid caps, I should say the sign of negative divergence is continuing even over here. So as a trader, you need to be very cautious, very careful while initiating new trades. If you have a look now in the weekly and in the daily time frame chart, what we can see is in the weekly we have a negative divergence. In the daily, rather than the price falling, we are having a consolidation. So after this consolidation gets over in the especially in the daily time frame chart, we will need to understand what happens, whether prices are trying to go higher or they are coming lower. If this consolidation continues for a longer period of time, then possibly the signs of weakening momentum in the weekly time frame chart might try to diminish. All right. So summing it up all, I guess as a trader, as a positional and as a swing trader, what I can understand is that the trend is up. We are near a smaller resistance. The bigger resistance has been fortunately broken. Chances are that maybe markets will move higher. But as a stock picker, you need to understand you have to be very precise which particular stock you're going to pick. Again, this is not a time that if you just keep your hands on a particular sector and then just trade randomly 3 to 4 breakouts, it's not going to work. You have to be very clinical. You have to be very precise which stock, which sector you are going to pick and which stock you are going to pick. If you do not do this, it will not be easy to make money in this sort of market. All right. So trade well, trade less. And if you feel this video is helpful to you as a trader, do share it with other traders also. Thank you.